in Panama, which is quite boring for expats. 2022 edition. So what we'll cover today is income tax, business income or corporate tax, property tax, which probably is going to be of interest to the majority of the audience, and the sale tax. Okay, income tax. Income originating from outside of Panama is tax-free. So many of those people who want to reside in Panama and work remotely, for companies residing outside of Panama, will not be taxed. In Panama, taxable income includes local wages and salaries. Again, local is the key word here. Business profits, pension bonuses, royalties, and profits from stock sales. Deductions may be made on medical expenses incurred here, as well as local donations, education expenses, certain office expenses, and loans for home improvements, the usual. Annual income. Local income again, not generated outside of Panama but within it, up to 11,000 is free, up to 50,000 15% on the amount over 18, and over 50k it's gonna be 15 on the first 50 and then 25% thereafter. Business income and corporate tax. So Panama special tax incentive zones, there are a couple. There is Panama Pacifico, there is Ciudad de Saber, and Zona Libre in Colón on the Atlantic side. They offer tax exemptions and discounts for qualifying businesses, interest earned on accounts, savings, and time deposits from licensed Panama banks are also exempt from local taxes. So that's why Panamanian banking industry is so prevalent. Now, equivalent to the corporate income tax established in many jurisdictions, this tax is levied on the profits obtained by companies resident in Panama only. For tax purposes in that territory, the tax rate is 25%, except certain state-owned enterprise would go up to 30%. However, there is a minimum effective tax rate applicable to those entities with income in excess of 1.5 mil. And in such cases, the tax rate is multiplied by the higher of the following two amounts. Usually taxable income determined in accordance with the standard rules, or you multiply the minimum rate for 67% by income earned by the entity in question. Annual corporate flat tax. So when you have the company registered in Panama, this tax is a single annual rate. It's what you pay regardless if it's generating any profit or not, and it's levied on a wide range of entities simply because they are incorporated in Panama. The amount is $300, and in other cases a little bit higher. Complementary tax. This tax is an advance on the tax on dividends. So if you pay out dividends, then it's going to be 10%. Now, what probably will apply to the majority is the property tax. So you can claim the property to be a family or primary residence. You can choose one of your Panamanian properties if you have several to be treated as primary residence, and you pay 0.5% on certain amounts and 0.7% on the amounts above 700,000. So here's a clear table to give you an understanding what's what. For all other properties, which is not a primary residence, like vacant lots, commercial property, vacation homes, second, third homes, beach houses, mountain properties, the rates are 0.6 to 1%, depending on the amount. Here is the table determining the amount. So the this is the assessed value, by the way. This is not the sales value, this is the assessment value. So if the assessment value in the registry of Panama properties is above 0.5 mil, you're paying 1%. If it's below, you pay lower. Now, there is an interesting law. It's called Law 28 that was established in 2012, and it establishes that new Panama residential properties, new construction that have construction permits issued between 2012 and 2018 may benefit from the following tax exemptions on the registered value of the construction and improvements, not the land. So Up to 20 years, you can get a tax exemption on the construction value. So here's a table to give you an understanding what's what. And a 10-year tax exemption on the registered value of the construction, not on the registered value of the land that we talked about, will be granted for all other types of construction, such as commercial and industrial. This is just continuation of the previous slide. As long as the property owner does not register the property as the tributary family patrimony or primary residence, then the tax exemption that grant on any construction improvements mentioned above shall remain in effect for the established term. By the way, you can switch and change the private residence as much as you like. Going on the property tax, real estate transfer taxes. Now, this is when you sell the property in Panama, are paid by the seller, and is 2% of the other updated registered value of the property or the sale price, whichever is higher. So in case your sale price is below the registered value, then you take the registered value. But most of the time you sell it above the registered value, which is conservative, and you pay on the higher amount, the 2%. If a property is bought by a corporation, now that's an interesting part, how to avoid paying tax. It is customary for the shares of the company to be sold. So you're not selling the property itself, you're selling the company with an asset attached to it. And therefore eliminating the need to pay the transfer tax. So this is on how to save 2%. Paying 2% is to buy a property on a corporation and then sell it as a corporation instead of an individual. Capital gains tax in Panama is a flat 10% of gross sales profits, provided you do not buy or sell real estate for a living. If you sell more than one property a year, any profits must be included in your Panamanian tax return. In this case, you would pay income tax on these profits, but no additional capital gains tax. And the final item is the sale tax, which is known as ATVMs, 7% on most goods, with the exception of basic necessity items like food and medicine. There is alcohol, which is taxed higher at 10%, and tobacco at 15%. That's it.